Hey everyone, this is Accounting Web. We offer web design for accounting firms. There's two kinds of accounting businesses hide in one field. One is the $200 1040, folks dropping off a shoebox of W-2s and 1099s once a year, then gone until next tax season. The other is the advisory and fractional CFO client, a SaaS founder, a dental owner, a construction GC, an e-com brand, paying 2K to 10K a month for strategy, cash flow forecasting, tax planning, and monthly close. They research for weeks. They read your site like an S1. Your site picks the business you're in. 4 phases: position, show, trust, convert. Here's the roadmap. 4 phases. Position speaks to business owners and founders, not every 1040 filer in town. Show uses named dollar amount tax savings, portal screenshots, your tech stack logos, and client brands. Trust posts CPA creds, E&O insurance, the partner's bio and photo, and reviews from named founders. Convert uses a fit quiz, a strategy call calendar, published retainer tiers, and a free tax savings review that turns a cold visitor into a call the same week. Phase 1. Positioning. The biggest mistake accounting sites make is aiming at every taxpayer with a pulse, a calculator hero, a full-service accounting tagline, 1040s from $149 pricing. Meanwhile, the SaaS founder, the dental owner, and the construction GC, the clients paying 2K to 10K a month, take 5 seconds and leave. They want an advisor, not a preparer. Positioning tells them they're in the right place before they ever call. Lead with advisory. Your hero should be a CFO level dashboard, a cash flow forecast, a KPI panel, a margin analysis, not a stack of tax forms, not a calculator photo. The headline names the high ticket service: fractional CFO, tax strategy, advisory. The copy speaks to the owner: SaaS founder, dental owner, construction GC, e-com operator. They hire on skill and insight, not price. You have 10 seconds to prove you get their business. Post a fee floor on the homepage. Hide your prices, and every inquiry starts with, "How much for a basic 1040? Publish the floor. Advisory from $2,500 a month. Fractional CFO from $6,000. Individual returns, if you take them, priced at $750. High enough to filter, low enough to avoid seeming extreme." The founder with a 4K per month budget scans those numbers and feels confident. The $149 return shopper clicks away. That's the goal. The floor is the filter. Own one vertical. Every metro has a "we serve everyone" generalist fighting on price. Every metro also has one specialist who owns a vertical: SaaS, dental practices, construction GCs, or e-com brands. The specialist wins the owner book because those clients trust the CPA who sees their exact P&L, tax scenarios, and cash flow rhythms every day. Pick the vertical that fits your book, references, and sharpest expertise. Then signal it everywhere: homepage, tagline, Meta, LinkedIn. Generalists compete on price. Specialists own the category. Name the client. Every word should tell the exact owner that your firm was built for them. For SaaS founders, dental owners, and construction GCs, we run the books and strategy you need. Build a page per vertical. SaaS CFO services, dental practice tax planning, construction WIP and job costing, e-com inventory and sales tax. Speak the language. SaaS founders want ARR-ready books and R&D credits. Dentists want doc-comp planning and practice valuations. Contractors want WIP schedules and job costing reports. Each page closes engagements the home page won't and wins niche searches on Google. Phase 2. Show. The biggest trust blocker for a high-margin firm is proof. A SaaS founder thinking about a 5K monthly retainer needs to see real tax savings, the portal they'll log into, your tech stack, and the brands in your book. Words don't close this. Dollar amounts and screenshots do. Almost no competitor builds this right. That gap is your opening. Tax savings case studies. Nothing closes a 5K advisory retainer faster than we saved a $3 million ARR SaaS client $247K in federal tax last year. That one line beats every generic tax promise on the internet. Build a case study per vertical. Name the industry and the size. Name the specific win, R&D credit, cost seg, entity restructure, QBI optimization. Offer a PDF version. A founder reading 3 of those decides in 5 minutes you know their business better than anyone else they're interviewing. The client portal. Modern owners expect a real dashboard, KPIs, cash flow, margin analysis, tax calendar that lives in their browser and updates monthly. Show a screenshot on your site. Show what lands on the 5th of every month, trial balance, budget versus actual, cash flow forecast, tax calendar alerts. Show the encrypted document vault. One visual moves your firm from shoebox CPA to modern advisory firm in one glance. It justifies the retainer before the first call. Named tech stack. Never say we work with leading accounting software when you can say QuickBooks Online Elite Pro Advisor, Xero Platinum Partner, NetSuite Implementation Certified. The founder buyer has spent weeks picking their own stack. Leading software sounds like you're behind. Naming QuickBooks, Xero, NetSuite, Gusto, Bill.com, and Ramp with the platform badges speaks their language and closes the engagement. A simple integration diagram shows the data path from their stack through yours back to their dashboard. Client logos. A founder spending $60,000 a year on advisory will scan your roster closely. Give them a reason to stay. Build a logo wall grouped by vertical. SaaS in one row, dental in another, construction in a third. Under each logo, name the engagement. Monthly close plus quarterly tax strategy. Fractional CFO for a 7-figure e-com brand. Where clients allow, quote them by name. That wall does 3 jobs: the closing argument, the SEO moat, and the signal that makes the founder community refer you. Phase 3, trust. A SaaS founder handing over a general ledger, a payroll file, and last year's return is trusting your firm with the financial core of the business. Before they book, they want licenses, credentials, insurance, the partner's face, and reviews from owners like them. They want to know who touches their books. Your competitors aren't showing any of it. The first firm that does wins the engagement. CPA credentials. Every serious cred in your firm, CPA, EA, CFP, PFS, CFA, belongs above the fold, not buried 3 pages deep. Link each badge to the state board or national registry so the prospect can verify in one click. Post the state and license number. Creds are the fastest trust signal for an owner buyer. Almost no competitor puts them on the homepage. The founder deciding between 3 firms this weekend sees the badges on yours and only yours and short circuits the rest of the research. E&O insured. Every serious firm carries errors and omissions insurance. Almost no firm says so on the site. Post the carrier, the aggregate limit, and the effective date. Offer the certificate on request. One click to the admin team. If your AI CPA peer-reviewed, post the pass rating badge. The founder knows an advisory mistake on tax strategy or a cash flow model can cost 6 figures. Showing insurance and peer review removes the biggest risk, and none of your competitors do it. Meet the partner. An owner handing over the financials of a 7-figure business wants to know who signs the return and joins the strategy call. Build a team page. Partner photo, credentials, years in practice, specialty vertical. Name the senior manager who runs the monthly close. Post their creds and tenure. Make it clear, your partner is on every strategy call, start to finish, not a junior. That line beats a dozen generic reviews. It removes the biggest objection to hiring a firm you haven't worked with. Reviews from founders. All reviews are not equal. 5 stars from an anonymous 1040 filer on an on-time return won't close a 5K advisory retainer. 5 stars from a named founder quoting the work, recovered $89K in R&D credits, restructured our entity and saved 6 figures in state tax, closed our books on the 5th for 3 years running, closes the engagement. Curate. Lead with the founder reviews. Ask your best clients for a named testimonial with company name and dollar outcome. Phase 4. Convert. Founder inquiries come in at 10 p.m. after a long board meeting. The owner researches their firm like a key hire, deep into LinkedIn, review sites, and peer referrals. On your site, they want a fit quiz, published retainer tiers, a strategy call booking, and a clear view of the first 90 days, all with no phone call. The tools are cheap. Almost nobody does it right. That gap is your high-margin book. Fit assessment. The biggest conversion leak on an accounting site is a send us a message contact form. Replace it with a 90-second fit quiz. Revenue range, vertical, current bookkeeping platform, service type needed. The quiz routes the right fit prospect to a strategy call calendar and the wrong fit prospect to a self-serve resource. That one tool doubles booking rate on advisory inquiries, filters out price shoppers before they waste the partner's time, and produces cleaner discovery calls. The partner walks in already knowing revenue, vertical, and service type. Book the strategy call. A live calendar with open partner slots closes engagements and email form loses. The owner shops late at night when your office is closed. Let them pick a day, pick a 30-minute strategy window, and commit in one click. Auto email a prep checklist so they show up with last year's return and current P&L. That single flow turns a Sunday night inquiry into a Tuesday morning booked call, while every competitor is waking up to an email. Prep to hold also qualifies the booking. Founders who prep are founders who sign. Monthly retainer plans. Publish the tiers. Most firms hide them and lose the founder at step 1. 3 tiers on one page. Starter at $2,500, monthly close, quarterly tax, year end. Growth at $5,000, adds monthly strategy calls and cash flow forecasting. CFO at $8,000 plus, board-ready reporting, fundraising diligence, KPI design. The founder reads, self-selects, and books the call at the right level. No price shock, no 2-week back and forth. Recurring revenue lands in month 1 because the visitor already knew what they were buying. Tax savings analysis. The top lead magnet for an accounting firm is a free tax savings review. 20 minutes on the phone, last year's return and revenue submitted ahead. The partner reads the return, finds 1 to 3 specific wins, an overlooked R&D credit, a misset entity structure, a QBI optimization, an S-election timing miss, and emails the founder a written summary. That document is the whole retainer pitch. About 1 in 3 recipients signs for advisory within 30 days. They got 6-figure value before any retainer talk. 1040 site versus advisory firm site. On the left is what almost every accounting firm runs. Stock calculator hero, a $149 promise, no case studies, a contact form. That site wins $200 returns once a year. 100 of those in tax season is $20K gone in April. On the right is the same firm positioned right. CFO dashboard hero, posted advisory floor, name tech stack, badge creds, fit quiz with a live calendar. Same CPAs, same shop, different book of business. One chases volume in April, the other books monthly retainers that compound every month of the year. The bigger picture is this. An accounting site built right does 4 things all day, every day at 0 marginal cost. Attracts SaaS founders, dental owners, and construction GCs, not $149 TurboTax shoppers. Qualifies them with a posted fee floor and a fit quiz that matches revenue, vertical, and service type before the partner picks up the phone. Builds trust with CPA creds, E&O, peer review, name, tech stack, and founder reviews. Retains them with monthly retainers that compound every client into recurring 12-month revenue. Raise the lifetime value. Fill the pipeline with founders, lock in the retainer. That's what the site is for. Next step. 3 ways we help accounting firm owners rebuild for the real money. Option 1, site audit. We grade